Welcome back to another episode of Dividend Dive, the podcast where we explore different high-yield dividend investment strategies. Today we're diving into an exciting topic: high-dividend gold ETFs, stocks, and exchange-traded notes, or ETNs for short. Gold has long been recognized as a safe haven investment, particularly during times of economic uncertainty. However, traditional gold investments, such as physical gold, don't typically provide regular income. But what if there was a way to invest in gold and also receive high dividend payments? Well, that's where high dividend gold ETFs, stocks, and ETNs come into play. Let's start by understanding what ETFs and ETNs are. An ETF, or exchange-traded fund, is a type of investment fund and exchange-traded product, with shares that are traded on a stock exchange just like regular individual company stocks. ETFs are designed to track the performance of a particular index, sector, commodity, or asset class. Exchange-traded notes, or ETNs, are another type of investment product that tracks the performance of a specific index, commodity, or strategy. ETNs are debt securities issued by financial institutions and are structured as unsecured debt obligations. They trade on stock exchanges, just like ETFs and stocks, and their returns are typically linked to the performance of the underlying index or strategy. Strategies like in our case of investing in gold. High-dividend gold ETFs, stocks, and ETNs combine the benefits of investing in gold with the potential for regular income. These investments aim to provide investors with dividends, which are periodic cash payments distributed by the ETF, stock company, or issuer of the ETN. Dividends are usually paid out of the profits generated by the underlying assets or business operations. One example of a high-dividend gold ETN is the Credit Suisse Gold Shares Covered Call Exchange Traded Notes, stock symbol GLDI. This unique ETN utilizes a covered call strategy on a portfolio of gold shares, aiming to provide investors with both exposure to gold and income generation. GLDI offers a unique approach for investors seeking both gold exposure and potential dividend-like income. Its current dividend yield is 12.93%. Another option for investors seeking dividend opportunities is the VanEck Vectors Gold Miners ETF, stock symbol GDX. This ETF focuses on investing in gold mining companies and aims to provide investors with exposure to the gold sector while also offering the potential for dividend income. GDX has a track record of paying dividends, making it an attractive option for investors seeking both gold exposure and regular income. Its current dividend yield is 1.49%, which for a gold ETF is high. Finally, if you absolutely wanted a gold mining stock that paid dividends, you may want to consider Gold Fields Limited, stock symbol GFI, a globally diversified gold producer with operations in multiple countries, including South Africa, Ghana, Australia, and Peru. As one of the largest gold mining companies in the world, Gold Fields is focused on the exploration, extraction, and processing of gold deposits. When it comes to high-dividend gold stocks, Gold Fields has caught the attention of income-seeking investors. While stock prices and dividend payments are subject to market conditions and company performance, Gold Fields has a history of distributing dividends to its shareholders. Its current dividend yield is 3.02%. Before we wrap up, let's recap what we've learned about high-dividend gold ETFs, stocks, and ETNs. High-dividend gold investments provide a unique opportunity to combine the benefits of investing in gold with the potential for regular income. Whether you choose a high-dividend gold ETF, such as the VanEck Vectors Gold Miners ETF, GDX, which focuses on gold mining companies, or an ETN like the Credit Suisse Gold Shares Covered Call Exchange Traded Notes, GLDI, which utilizes a covered call strategy, or finally a gold mining stock like Gold Fields Limited, GFI, that actually digs the gold out of the ground, these investments aim to offer exposure to the gold sector and potential dividend-like income. However, it's important to remember that investing in gold and high-dividend instruments comes with inherent risks. The price of gold can be volatile, and the dividend payments or returns may fluctuate based on various factors such as market conditions and the performance of the underlying assets or companies. Therefore, before investing, conduct thorough research on the specific ETFs, stocks, or ETNs you are considering. Evaluate their historical performance, track record of dividend payments, underlying assets, and the strategy employed. Additionally, carefully assess your own investment goals, risk tolerance, and time horizon. If you're uncertain about how these investments fit into your overall portfolio, consider consulting with a financial advisor who can provide personalized guidance based on your unique circumstances. Well, that wraps up today's episode on high dividend gold ETFs, stocks, and ETNs. We hope you found this discussion helpful in expanding your knowledge of investment opportunities in the gold sector. Thank you for joining us on Dividend Dive. Stay tuned for our next episode where we'll delve into another fascinating investment topic. Remember, knowledge is power, so keep exploring and making informed decisions on your financial journey.
Hey there, before we end, we want to make sure we're transparent with our listeners, and we want to disclose that the podcaster may own stock in this company. Now we want to make it clear that we're not financial advisors, and this podcast is for educational and entertainment purposes only. We're not making any recommendations to buy or sell any securities. However, we understand the importance of FTC compliance, and we want to let you know that any opinions expressed in this podcast are solely our own and are not influenced by any potential stock ownership. At Dividend Dive, we strive to provide accurate and unbiased information to our listeners. We believe in transparency and integrity, and we want you to have all the information you need to make informed investment decisions. As always, do your own research and consult with a financial advisor before making any investment decisions. Thanks for listening, and let's keep swimming. That's it for today's podcast. Thank you for listening, and be sure to hit that subscribe and notify button. If you have any questions or comments, please leave them in the comment section below. Also, let us know if there is a high-yielding dividend stock you would like us to review. See you next time.